As the tariff story continues to unfold, we'll continue to connect you with portfolio managers and experts here at Fidelity Canada who will provide you insights on the evolving story. Joining me now in studio is portfolio manager David Tulk. David, thanks for sitting down with me. Let's get straight to it. Your overall reaction to the tariffs that sort of swooped in earlier this week?
As a Canadian, I'm dismayed. I think a lot of us are that it's come to this. But as an investor, I think this was a risk that we saw coming. This was something that we knew would potentially be realized, and it has been realized. And the positioning that we've taken in a lot of our multi-asset class funds anticipates some of the challenges that I think we're going to experience in the months ahead.
Can you dig deeper into what the positioning is for the global asset allocation team and how you sort of pivoted at this point in time?
Yeah, so one of the views that we've had as a consistent position, even before this tariff risk, was concern around Canada. So we've been worried about Canada's economic performance from a lack of business productivity, from some of the challenges that the housing market is facing, as well as levels of household debt. So from an investment perspective, we wanted to be underweight Canadian assets with a preference of being invested elsewhere in the world. Now, the reality of the tariff shock is that it only amplifies some of the challenges that I think the Canadian economy is going to face. Canada is a small open market economy. It depends crucially on international trade. And as you hurt demand for Canadian exports through these tariffs, we have to be suitably concerned that this will also weigh on Canadian financial assets.
So if these tariffs do stick for a prolonged amount of time, what is the positioning of the team going forward?
Yeah, I think if this is a significant shock that remains in place, and I think a lot has to be determined, so we're going through negotiations and we'll see how this all shakes out. Right. But in the event that this does remain in place, I think we're pretty comfortable with retaining that positioning of being very cautious on Canada. I think it's an important thing to realize that there are some economies that will be hurt more, and Canada unfortunately is towards the top of that list. Now, an important counterpart to that and what we're trying to do as we speak is try to understand, well, where do we want to be overweight in terms of the rest of the world? And for a long time, we've been comfortable being overweight the US economy. That's where the growth was, that's where the momentum was. But at some point, I think we're starting to get some signs that that could be shifting to some extent. So trying to understand where in the rest of the world, whether it be the United States, whether it be in Europe, whether it be in emerging markets, some of those allocations I think are places that we're looking at very carefully to try to understand where there's opportunity.
So lastly, what can advisors take back to their clients in terms of looking beyond sort of the negative headlines and maybe looking at some pockets of opportunities elsewhere?
Right. No, I think there's absolutely a strong incentive to look through as many of the headlines as you possibly can. So a big part of that is really just taking the emotion out of it. And this is an important context in any element of investing, is that these are emotional times. But when it comes to investment decisions, it's really important to just try to understand the underlying fundamentals. So first and foremost, that is the first step. Then second, I think, is really to just retain diversification. No one really has a strong sense of where things are going. So by being diversified, you protect yourself against a whole range of different economic and market outcomes. And then third and finally is really sticking to a medium-term plan. So having a fundamental view around a company and understanding that the price can be pushed by emotion, sticking to that fundamental view can create opportunity for active managers from a security selection perspective. It allows us also as active asset allocators to understand where the market moves too far in one extreme and we can move in the opposite direction. And I think even taking a step back as a Canadian again, this is an opportunity for Canada to really rethink its place in the world. So we've driven our economy largely on north-south trade. And now we need to reconsider what opportunities exist across our provinces and also into the rest of the world. So if there is some adjustment and some pain that needs to be felt, if it can be done in the name of building a more diversified, more resilient economy, that's unambiguously good news.
So still a fluid situation with these tariffs, but really appreciate you sitting down with us, David, and providing your perspectives and insights.
Thank you for having me.